Michael, we've got you here to react to this. Markets up across the globe this morning. Yep. Why? What's the anticipation there? Is some of the uncertainty coming out of this vote?
I think that people are more confident that the status quo will remain. They like that, and a lot of people aggressively sold the prospect of leave. Now, you had that. You had this June expiration on Friday, which also skewed markets a bit. I think a lot of that's coming out again and again. People start to keep trying to be negative. I just want to throw this out there right now, though. What happens if leave wins here? I think what will happen is you'll see that it will have this perceived impact on the European, UK, and global economies. For me, there could be a catalyst in that. The catalyst it could be is Angela Merkel finally loosening purse strings and starting some expansionary fiscal policy in Germany, leading the rest of Europe that way, which I think would be the next step to promoting growth. If monetary policy doesn't work, there's this blip of a Brexit. That's the way forward here, and that could end up being a positive longer run.
So Bank of England is basically suggesting this would be traumatic for not just their economy, not just the European, the global economy.
I mean, there's a model to follow here. It's the Norwegian model, where you have all of the benefits of free trade with Europe, but you're not beholden to Brussels. And so I think that it makes a lot of sense. I don't think that really the downside is as big as people are projecting in the long term. But then they have real problems that kind of mirror some of the problems we're talking about here between trade and immigration and national security. There are 5 million immigrants working in the United Kingdom that aren't British citizens. When you're talking about a country of 60 million people, I mean, this is a big percentage of their total population.
It is a big chunk. It has to be worked out, whether it's Norwegian model or a new model. But the point is it hasn't been worked out, which brings us to another point, which is if this vote goes through, what will the House of Commons, which skews heavily in the Remain camp, will they try to invoke some parts of the law code to say you can't do this because you haven't laid out how we're going to fix this? They're going to do everything they can to obstruct, delay, and try to make everyone reverse this.
I think this issue also might be masking a deeper-seated fear about the health of the U.S. economy. The Wall Street Journal today publishes a survey of economists, and with hiring slowing, auto sales are slipping, business investment is nowhere to be found. You have economists think that there's a 21% chance of a recession within the next year, and that's up. It's more than doubled from a year earlier.
Well, so in other words, as President Obama would say, the Wall Street Journal is peddling fiction this morning. That's not happening. Everything's great. But,
well,
taking your spot on.
My point is that I don't think that the 10-year would be near, the yield on the 10-year would be near a 4-year low. Correct. Unless there's a bigger problem outside of Britain's deciding whether to stay in the EU or not.
The 10-year making a low. The entire Japanese and Swiss yield curves negative. The German boons were negative last week.
And by the way, here's the British pound, because a big move here. It's at a 2-week high this morning, as we do see these polls swing in favor of the Remain camp.
And look, some of that is poll swing, some of that is macro guys getting squeezed.
All right, and so
you've
got the pound rallying to 2-week high. Oil prices, also, if I can throw up an oil board, oil is benefiting from these waning fears of the Brexit. Oil is up nearly 2% this morning. It's at 48.77 a barrel. Would you say that's a majority a Brexit move there?
Some of it's squeezed. Some of it had to do with oil, making this massive move, getting above 50. You have rig count going higher, made everyone say, aha, I can short oil now. Well, no, you can't. It has momentum. I would not be shorting this here.
Markets are going to be watching this closely. We've got Thursday. We're a long way away from them. For markets to have this level of uncertainty, probably going to see some big swings throughout the week.
Yeah, definitely a big week. You have Yellen speaking again tomorrow and Wednesday. Right. And, there's going to be a lot going on. Again, to get back into market forces, we have this Russell Index rebalance coming Friday. It means a lot of crazy moves in a lot of these little stocks. It causes a lot of pain, a lot of consternation, euphoria if you catch it the right way, but it's going to be a lot happening.
You would be interested in this on the oil front. There's a new report out by the energy consulting firm Wood Mackenzie that says electric cars are poised to reduce U.S. gasoline demand by 5% over the next 20 years, over the next 2 decades, but it could be as much as 20%. So you want to talk about keeping a lid on much higher.
I'll believe it when I see
lower, longer.
I'll believe that when I see it.
But again, electric technology, even in cars that still burn gasoline, is really cutting demand for fossil fuels.